I kind of just picked out a needs analysis for one of our existing clients here. He's 42. He is a physician. His wife currently does not work. She helps out with administrative duties, but for the most part, he is the main breadwinner. He's 42 years age, has 2 kids, and the youngest kid is 4 years old. Now, this is how we actually planned for his life insurance need. So the first thing we did was the mortgage principal, so which is about $950,000 on the mortgage. So we got that covered. Any other loans? There's no other loans. Great. We move on. Education goals. So he has, like I mentioned, 2 kids. He wants to make sure that there's going to be enough money for their undergrad and postgrad. So that's a goal that he has for his kids. It's something that he just would like to do. So we've already covered that. So obviously, if his kids are this young, by the time they actually get to university, that's going to cost quite a lot. So we do a quick present value calculation to figure that out. And in today's dollars, that was about $200,000. So if something happened to him today, and we receive $200,000 cash that we can invest over the next 14 years, by the time that growth comes in and everything, like, all things taken into consideration, there'll be enough money for the kids to go to undergrad and postgrad. So that's something we definitely want to make sure that we've taken care of. The next one is emergency fund. So like I mentioned, at least 50 grand for the surviving spouse to make sure that, there's just cash on hand. Anything unexpected comes around, anything happens, you have money available that you can, take care of that need. The final expenses we had here is about $15,000. So when you add all of that in, his total lump sum need is roughly $1.2 million. Now, this is where, unfortunately, when he thought this equation will stop. He's like, okay, no problem. What we'll do is we can just apply for $1.2 million of coverage, but not necessarily, because, we still have to go ongoing needs, because like I mentioned, he is the main breadwinner in the family. So the next part of the equation here is the ongoing needs. So his ongoing needs, so his current monthly lifestyle was roughly about $14,000 a month. That's what he needs. So after a brief conversation, we realized, okay, so if something happens to him, he would like to make sure that his spouse and his kids will receive roughly $10,000 a month until his youngest child is 18 years of age, which is 14 years from now. So that's about $120,000 a year after taxes. For 14 years is what he's going to need, or he's going to need as an ongoing need. Finally, offsetting any existing coverages. So in this case, I kind of just took it out just so you'll get an idea of how this whole thing actually works and comes together. So for his existing life insurance coverage, we just wrote 0. He doesn't have any life insurance coverage, and we'll kind of total it up now. So his lump sum need is roughly $1.2 million. His ongoing need is roughly $1.6 million. So the additional life insurance coverage he actually needs as of today is roughly $2.8, $2.9 million.